The Flood Disaster Protection Act, or FDPA, establishes requirements that federally regulated lenders must follow when financing properties located in designated flood zones. These rules are designed to ensure that buildings located in special flood hazard areas maintain adequate flood insurance coverage throughout the life of a loan. For lenders, understanding these requirements is critical for avoiding regulatory penalties, protecting collateral, and managing portfolio risk. Under the FDPA, lenders must determine whether a property securing a loan is located in a special flood hazard area, as identified by FEMA flood maps. If a building securing the loan is located in a special flood hazard area, and the community participates in the National Flood Insurance Program, the lender must ensure the property carries adequate flood insurance for the life of the loan. The required amount of coverage must be at least the lesser of the outstanding principal balance of the loan or the maximum coverage available under the National Flood Insurance Program or the insurable value of the structure. It's important to note that the flood insurance requirements apply to the structure itself, not the land. These requirements apply to most loans secured by improved real estate, including mortgage loans, refinances, home equity loans, and many commercial loans. To comply with the Flood Disaster Protection Act, lenders must fulfill several ongoing responsibilities. 3 of the most important include flood loss protection, timely borrower notification, and flood insurance escrowing. One of the lender's primary responsibilities is ensuring that the property securing the loan is protected from flood-related losses. If insurance coverage lapses, expires, or becomes insufficient, lenders are required to take action. Federal regulations require lenders to initiate forced placement procedures to obtain flood insurance if the borrower fails to maintain coverage. Another important responsibility is providing borrowers with timely notification when flood insurance is required. This notice informs the borrower that the property is located in a designated flood zone. Flood insurance is required as a condition of the loan, and federal disaster assistance may be limited if coverage is not maintained. Additionally, if a flood insurance policy lapses, lenders must send a 45-day notification letter informing the borrower that coverage must be restored before forced placement occurs. Providing these notices accurately and on time is an essential part of regulatory compliance. For certain residential loans, lenders are also required to escrow flood insurance premiums and fees. Escrowing means that funds are collected as a part of the borrower's monthly payment and set aside to pay flood insurance premiums when they come due. This requirement helps ensure that coverage remains active and reduces the risk of policy lapses due to missed payments. Escrowing also helps provide lenders with greater oversight of flood insurance coverage over the life of the loan. Flood compliance is not a one-time requirement at loan origination. Lenders must maintain ongoing processes to ensure that insurance coverage remains active and sufficient. This includes performing accurate flood zone determinations, monitoring policies for expiration or cancellation, verifying adequate coverage amounts, sending required borrower notices, and initiating forced placement when necessary. Regulators closely review these processes during compliance examinations, and weaknesses in monitoring can result in regulatory findings or penalties. Managing flood insurance compliance across an entire loan portfolio can be complex and resource intensive. CP Insurance Associates partners with lenders optimizing this process through specialized insurance tracking services. Our tracking solutions help lenders monitor flood insurance coverage across the life of the loan, identify expiring policies or insufficient coverage, communicate timely required regulatory notifications, apply force-placed coverage when necessary, and reduce administrative burden for your lending and compliance team. By providing continuous monitoring and reporting, our team helps lenders maintain greater visibility into their flood insurance portfolio while supporting FDPA compliance. The Flood Disaster Protection Act plays a critical role in protecting both lenders and borrowers from the financial impact of flood events. By ensuring flood loss protection, providing timely borrower notifications, and managing flood insurance escrowing requirements, lenders can protect their collateral while maintaining regulatory compliance. With the right tracking support in place, lenders can confidently manage flood insurance requirements across their entire loan portfolio.